أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وبارك وسلم. Assalamu alaikum, dear students. I welcome you all to another session of video lectures for the subject Principles of Auditing. Inshallah, in our today's lecture, which is lecture number 7, we'll discuss the stages of auditing and auditing process model. Basically, these two lectures are somehow related. We can say the contents of both of the lectures are same, but somehow they are different lectures. So that's why we have decided to discuss both topics in a single lecture, so there is a connection, so you are able to develop a connection between both of them and at the same time differentiate between both of them. So our today's lecture is basically from chapter number 4, lecture 2 of chapter 4, which is Auditing Stages in the Audit Process Model, in the lecture notes. And overall, this is our 7th lecture from video lecture series. So let's start with the first topic, stages of auditing. What are different stages of audit? So there are series of steps carried out by the auditors before the audit, during the audit, and after the audit in order to complete an audit as per the standards. So those all step-by-step work carried out by the auditor in 3 different stages: before the audit process, during the audit process, and then after the audit process. Combinedly, all these stages, all those steps are known as the stages of auditing or stages of an audit. So overall, there are 10 different steps or stages that an audit process passes through. When we say audit process, by this we mean an external audit. An external audit is usually the audit of financial statements, right? So the first step or stage in the auditing process is audit appointment. The second stage is engagement letter. The third stage is initial planning. The fourth stage is preparation of the audit plan. The fifth stage is accounting system review. Stage number 6 is analytical review of techniques. Stage number 7 is collection of audit evidence. Stage number 8 is substantive testing on transaction level procedures. In stage number 9, review of the financial statements, compliance with standards and material misstatement. And stage number 10 is preparation and signing of the audit report. So these are 10 different stages of the audit. Means an audit process is divided into these 10 different stages. Each stage or step has its own activities. An auditor is required to design and plan what to do in all these 10 different stages, and that plan is made before commencement of the audit process, before the start of the audit process, right? So that plan, which outlines all the activities carried out by the auditor and his staff, which is called the audit team, in these 10 different stages, that plan is called audit program. That plane is called audit program. So audit program is basically a roadmap of the entire audit process, where auditor explains and determines and defines what is carried out by the auditor and his team before the audit, what is carried out by the auditor and his team during the audit, and after the audit. So basically the auditor plans what is done in these 10 different stages. These 10 different stages, some of the steps are before the audit, some of the steps are during the audit, and some of the steps are after the audit, right? So let me first talk about the audit team. Audit team is usually a team of professional individuals led by an auditor. An auditor is basically a full member of a accounting organization. He's a full member, has expertise, and he is chartered for signing and issuing audit reports. So that auditor has a team of the audit staff, and that audit staff consists of initial level members and intermediate level individuals, and then experienced individuals, right? So usually a team of auditors consists of like 3 to 5 people, depending on the audit that they are carrying out, depending on the level of work, level of experience and expertise required in that audit process, and also the complexity of the company which is being audited. So it's obvious if there is an audit of a big company, so which will be carried out in more time, like maybe 2 weeks or 1 month, and the complexity of the company is so high, same as the complexity of transactions and their systems. So definitely a very qualified and highly experienced audit team is going to be required. So then auditor who is assigned to carry out the audit then has to choose a team of auditors who are very expert. So all those auditors will be working under one auditor who will at the end eventually sign the report and issue the report, right? So a team of auditors is mostly from 3 to 5 people, who is led by an auditor who is assigned at the initial stage of the audit process, and he is the one who will sign and issue the audit. And the other people, they'll be working with the head auditor or with the lead auditor in all the auditing process and during the audit and before and after the audit, right? So now we'll talk about each stage one by one, what is carried out by the auditors or what is done by the auditors in each stage. But before that, let me divide all these 10 steps, alright, these 10 steps into 3 different like stages, 3 different categories, right? 10 stages are divided into 3 different categories. Here I'll elaborate all these stages one by one. So we have these 10 different stages of audit process. Now these stages are divided into 3 categories. We have category A, category B, and category C. In first category there are 3 stages, right? The first, which is called pre-audit stages category. Pre-audit stages means that these 3 stages are before the commencement or before the starting of an audit process, right? So by this I mean that before the starting of the practical work, which is verification and examination of the accounting record and financial information of a company. Before we physically start work, we have to carry out these 3 stages. Therefore, This category, category A, is called pre-audit stages category. So the first stage in this category is audit appointment. In this stage, the company who wants to audit its financial accounting records and financial information contacts with the auditors or audit firm. Upon receipt of the request from the company, audit firm reviews the availability of the staff within the firm in order to reject or accept the request which has been received from the company. So upon their internal review, when they see, before they carry out internal review, they do the review of the requesting company to see what type of company it is, and looking at its complexity and its size, also its risk. Then after they have figured out, after the audit firm has figured out what type of company it is, what its complexity, and what type of systems they use, what type of services they provide, for example, and what is the size of this company. After the audit firm has, the management of the audit firm has analyzed that, they then review internally to see if they have available staff which can fulfill the requirements of that company. After they have figured out that they have available staff, they appoint one auditor to lead the team within the available staff. And when the person who is going to lead the audit team and audit that company is assigned, this stage completes, and this is called audit appointment, right? The company which from where the request has been received by the audit firm, the request is forwarded to that concerned auditor. Then that concerned auditor carries out further communication or correspondence with the requesting company, right? So when the request is forwarded to the auditor, this stage is over. Now the second stage starts, which is called audit engagement. The auditor who has been assigned by the audit firm to carry out the audit of the requesting company, he then starts communication with the company who sent request. So he has to once again review the company, review the type of work and the size of the work as well, has to go to the website of the company and has to get a lot of information, both general and sensitive information about that company being audited, so he can assess the risk and other factors involved in carrying out the audit of this company. Upon getting the information regarding that company, the auditor writes an engagement letter, which in normal words we say a contract, right? Where he writes down terms and conditions, and also the amount of fee which is going to be charged by the auditor or the audit firm. This engagement letter or the contract, or you can say proposal, is then forwarded back to the requesting company by the auditor who has been chosen by the audit firm. Then there is a communication, back and forth communication between the auditor and the requesting company on the terms and conditions, or maybe on the fees. Once everything is decided by both parties and both parties have agreed, here by both parties I mean the auditor and the company who wants to audit its financial statements, then what happens is that the audit engagement letter is signed by both parties. From the audit firm, the auditor signs, and from the company who is being audited, their representative signs. When the signs are both parties sign, it's duly signed, then the contract or the agreement is in place, and this is the end of the second stage. Now the auditor has to enter into the third stage of the audit process, which is called initial planning, right? In initial planning, auditor has the knowledge of the business, as from the first and second stage he already had studied about the company being audited, so he further goes to the details so he can get further information based on which he will prepare a formal plan, which is called audit program, which is the fourth stage. In order to prepare himself for the fourth stage, he do all the activities here in the third stage, which is called initial planning. He gets a lot of knowledge about the business of the company that he is going to be auditing. He does a risk assessment. A risk assessment here means that he studies the company, what type of accounting system the company are using, or what type of reporting system they are using. Also, how is their filing system, how is their reporting system. Everything is assessed, and based on that risk of possibility of misrepresentation, errors and frauds and violation of accounting standards, the risk of that is assessed, based on which the further formal planning is done. Also, the auditor sometimes visits the company for the internal control review. The auditor goes to a company and just for initial visit, the auditor go there, the auditor meet the concerned individuals, see their accounting department, finance department, and procurement department, sales department, marketing department. The auditor meet different department heads and have a initial meeting or chat with them, may ask some questions so he can find out how their internal control system is, how their internal work system is, how flexible it is, how rigid it is, and how safe it is. So in order to review that, he may have initial meeting with different department heads. By this, he will assess and review the internal control system of the organization. Also, in this stage, he may find out how is there the procedure of buying something in that organization, or ordering something in that organization, and also what is the procedure of cash collection and cash management, also accounts management, payables and receivables management. All that is reviewed. Then control procedures are reviewed. Auditor may also see who are the authorities in that organization, what is the organization structure, who is doing what, and what authority has been assigned to various individuals, and who gives approvals, and what is the procedure of giving approvals, and also the segregation of duties of each individual, especially the people who are in key positions. After studying all this and having information, the auditor now has finished stage number 3 of the first category before audit stages. Now enters into the second category, which is stage number 4, audit program. Based on the information from stage 1 to stage 3, the auditor now plans practically for the audit, for commencement of the audit, for starting the practical work in the audit process. So the first practical work auditors do is they have to formally write a plan. In the plan, which is called audit program. Audit program, in this plan, auditor writes down, usually they make it on a big chart, and that chart is usually pasted on the walls of the room where auditor carries out his audit, or maybe he can have that within his computer system, or maybe printed on paper. But the main thing is that he plans and defines, first of all, defines his team, how many people, and then what each day work is to be carried out by whom, right? It means that there are the names. First, number of days are defined, in how many days this work is, the audit process is going to be completed. Then who will be doing what on what exact date. Deadlines are given to each and every activity, and based on that, the audit team works on daily basis. From start of the day till end of the day, the auditor has to finish all the activities mentioned in this audit program or in this chart, specified and determined or given to the team by the auditor. The audit team has to finish out all those activities within that specific date before, for example, 12 a.m. right? So that's how auditors are then able to complete their work within the deadline. Then after the auditor has completely designed and planned the audit process by the name of audit program, the 4th stage is complete. Now they will enter into the 5th stage, which is called accounting system review. Auditors will review the accounting system. Practically they are into the mostly what happens that the audit team goes to the business or the company which is going to be audited. They request the company that a room is allotted to them. The keys of that room is possessed by the audit team or the auditor himself. All the information, whether it is journals and accounting record and financial information, everything is transferred to that room, and no extra paper comes into that room, and no extra paper goes out of that room without the permission of that auditor. And the keys of the auditor or of the room are also in the possession of the auditor, right? Once everything is within that room, and auditors every day visit that room, go to that room, and they carry out their work in that company. Now they start from accounting system review. They first review the accounting system of that company to see if they are using a virtual system, or maybe an electronic system, maybe an online system, or maybe they are using software like QuickBooks and Tally, and maybe they are using ERP and some other complex digital systems. So they're reviewed by the auditors to see the vulnerability of those systems, and the safety of that system, the access of the various employees to that system. Everything is reviewed. And while they are reviewing the physical documents, they keep in mind the vulnerability and the safety and the complexity of that system into their minds, and then they physically review their accounting record. After accounting system has fully been reviewed by the auditors, they are now done with the stage 5. They enter into the stage 6. Stage 6 is analytical review of techniques. Basically, from stage 5 to stage 9, these stages may happen like randomly, or maybe simultaneously, or maybe one ahead than other, or maybe these stages happen collectively, but the main purpose is that they are all those stages which we call them during the audit stages of an audit process. So in stage number 6, the auditors, they review the techniques used by the company, and they do the analytical review of all those techniques used by the company or the organization. Those could be, their procedures of purchasing or ordering something for the company to be used inside the company, or to be used in the production of a product, for example. Also, the payment system, in account receivable collection system, account payables system, check collection system, also cash collection system, cash payment system, also what type of forms or we can say invoices or bills do they have, or documentation do they have to control all these activities. Those are analytically reviewed. Also, there will vulnerability and the chances of fraud within each task or activity is also checked. The possibility of making fake or faking out those documents is also checked. Also, the procedure of getting approvals is also analytically reviewed to see what possibility is there for the intervention. Before it's finally approved and gets processed. So all these things are reviewed by the auditor, and keeping in that, when they do the practical verification of the accounting record and financial information, during this process they also have the collection of the audit evidence, which is the 7th stage here. Audit evidence is basically any piece of information which could be in any format or could be in any form, maybe physical, maybe electronic, maybe soft, or it could be internal, it could be external, it could be a third-party verification, but any piece of information which helps the auditor in reaching to a solid conclusion, to a solid opinion, which he will give at the end of the audit process, or mention that in the report. So that piece of information could be in paper form, could be in whatever form, is called audit evidence. So stage 7 is audit evidence. Stage 7 basically it starts from stage 4 till stage 9. Is in all these stages auditor do audit evidence collection. Then we have stage number 8, which is testing, verification and vouching of the transactions. And testing, what do they do in stage number 8? For example, they do sampling. Sampling is, for example, out of 100,000 transactions, they randomly choose like 1,000 transactions, and then all the accounting record and financial information in support of those transactions are requested by the auditors and put in the test, right? So this is called sampling. So all those 1,000 transactions from 100,000 transactions, those 1,000 transactions are then further tested with the help of verification and vouching. So vouching is basically looking at the physical or documental support to that transaction, and verification is to verify it with the third party, right? So auditors check all the record within the organization, then that is compared with the outside organization, with the consent, or with the organization which has a connection to this transaction. From them it's confirmed, their values are confirmed, their procedure is confirmed, their the standards are checked, whether it's recorded according to accounting standards or not. I mean, for example, I'll give you a simple example. If there is a purchase of land or maybe an equipment for the factory, for example, that is a fixed asset. So first auditor will vouch for that. Vouching is the auditors will check. So first vouching is it will check that was it really required by this organization at that exact date that this equipment was purchased. Okay, if it is proved that yes, it was required, then it will be checked that how it happened, who basically gave the approval for the purchase of this asset, this equipment, and how that request was processed. And then whatever has happened will be compared with the policy of that organization. It will be compared with the policy. They will check that what is the policy of the organization for the purchase of an equipment like this, and what has happened practically. It will be then checked whether the policy of the organization is observed or not, and then all the signatures and approvals on that piece of paper is also checked, and then from whom it has been purchased. The price will also be compared in the market, also in the industry, and then at the end it will be verified with the person, with the organization from where it was purchased. That is physical testing. After this, how this transaction is recorded. Does this transaction have sufficient paperwork behind it, sufficient information, and that paperwork is authentic, correct? After it has been proved, then it is checked how the entry has been made. Is this entry according to the national accounting or financial reporting standards or not? So that's how stage 8 takes place for each and every transaction, right, in the sample, correct? Then we have stage number 9. After all the accounting records for the sampled transaction have been done, then the auditors go and check the financial statements. All the financial statements, they check their first they check their material misstatements by vouching. For example, they see the cash balance, then they go back to that record and tracks how this cash balance has reached to this, and item by item, all the items of all the financial statements, one by one, starting from the balance sheet. First balance sheet is reviewed, and each item of the balance sheet is traced back to the accounting record and verified and vouched, transaction by transaction and item by item. Once the balance sheet has been reviewed, then during this review process, audit evidence are also collected. Then the profit and loss statement, then the cash flow statement, then the change in equity statement, also notes to financial statements. All of those information is reviewed, and during the review process, testing, verification and vouching is also done. During this process, audit evidence collection is also done, and during this process they also review the techniques and review the accounting system as well, compare all the transactions with the standard procedure and standard policy of the organization, and the audit evidence collection happens from stage number 4 to stage number 9. Once all these 10 stages are over, now the auditor has sufficient information, enough information with him in form of audit evidences, which he keeps or puts in a file which is called Audit Notebook. Audit Notebook is basically a file where auditor records all the information, audit evidences that can help him reach to a solid conclusion. That entire file is called Audit Notebook. So now our auditor has the Audit Notebook, which contains all the information that he has he requires to be included in an audit report. Now he is able to prepare the audit report. Stage number 10, which is after or post audit stages. Now audit practical work is finished. Now the last thing is to issue the audit report. Before issuing, the auditor prepares the audit report, and he follows all those standard procedures that I show you in the last lecture. I'll show you a sample audit report, then a practical audit report. Prepares the audit report. After preparation, he reviews the audit report if he has not left out something. When everything is complete on that report and is ready to be shared with the shareholders of the company, or maybe to inside or outside of the organization, then he signs the audit report. When he signs, this report is issued. So that's all how an audit process starts and how an audit process ends. It passes through 10 different stages, which are divided to 3 different categories: pre, during, and post. Right? So that's all about the audit stages. I hope you guys have learned things from here, and I hope that if you have any question, you will get back to me, so I may help you with the explanation, with the response to your questions. Right? Alright, now let's talk about the audit process model. Remember that audit stages in audit process model is the same thing. It's the same things. I mean, 2 different names for the same topic. Information, everything is same. Just structure of the lecture is different. Right? There we had 10 different stages in 3 categories. Here we have 4 phases. It means that we can also do those 10 stages of the audit in these 4 phases. Right? Once again, let me make it clear to you that those 10 stages that we discussed earlier are same as these 4 phases. It's just dividing those 10 stages into 4 phases. Right? There we had 10 stages, 3 categories. Here we have 4 phases. The same information, the same work, everything is the same. Just structure and name of the lecture is different, or topic is different. Right? So the auditing stages are carried out by the auditors in a standardized way in 4 phases, which is known as audit process model. Like it's the formal name. Audit process model is basically the formal name of auditing stages, 10 stages. Model, 4 phases, right? Following are 4 phases known as audit process model. Phase number 1, client acceptance. Phase number 2, planning. Phase number 3, testing and evidence. Phase number 4, evaluation and judgment. In phase number 1, client acceptance, in this phase we basically do 3 stages. Number 1, audit appointment stage, audit engagement stage. Number 3, initial planning stage. Those 3 stages are done in the first phase, client acceptance. Then we have planning. In the planning phase, what stages are done? Audit program stage, Let me show you here. Audit program stage, accounting system review stage, and analytical system review. These three stages are done in which phase? In planning phase, right? Then we have phase number 4, testing and evidence. In this phase, what we do? In this phase, we have audit evidence collection, testing and review of financial statements. 7, 8 and 9 stages are carried out in phase number 4, testing and evidence. And then we have phase number 4, which is called evaluation and judgment. Here, preparation of audit report and then issuance of audit report is carried out. So you see, as I told you, the information, the purpose is same, but the structure of the topic and the name of the topic is different. Rest of the things are same, so you don't have to worry about, right? I have already explained all these, so let's see how audit process model could be explained in 4 phases. It's the same 10 stages, but let's see how can we explain those in audit process model 4 stages. Stage number 1. Objective is the client acceptance phase of the audit plan. Phase 1 involves deciding whether to accept a new client or to continue with the existing one. The same thing as I explained earlier in audit stages, 3 first audit stages. What do we do in this first phase? Evaluate the client's background and the reasons for audit. That's what I told you earlier. Determine whether the auditor is able to meet ethical requirements regarding the client. Determine needs for the professionals. Communication with predecessor auditor. Predecessor auditor means if this company has been audited earlier by other auditor, so now this time the auditor who will be auditing this company has to contact with the previous auditor to get information. Prepare client proposal, select staff to perform the audit, and obtain engagement letter. You see, all those 3 stages are done in the first phase. Phase number 2, planning the audit. Determine the amount and type of evidence and review required to give the auditor assurance that there is no material misstatement of the financial statements. So basically this happens in plan and phase number 2, which is the planning. The purpose of this phase is this. Now, in order to reach to this purpose, what procedure is carried out? Number 1, perform audit procedure to understand the entity and its environment, including entity's internal control, as I told you earlier. Assess the risk of material misstatements of the financial statements, determine materiality, and prepare the planning memorandum and audit program containing the auditor's response to the identified risks. As I told you earlier, in phase number 2, basically stage 4, 5, and 6 is carried out, which I explained to you earlier. Phase number 3, testing and evidence. What is the purpose of this phase? Test for evidence supporting internal control and fairness of the financial statements. Once again, I'll mention this in this phase 3 we do 3 other stages, stage 7, 8 and 9, right? So let's see. Test of controls, substantive test of transactions, analytical procedure, test of details of balances, search for unrecorded liabilities. So all these things, as I explained earlier, are carried out by the auditor in order to reach to the objective of this phase. And then we have phase number 4, evaluation and reporting. This is basically the 10th stage that we earlier discussed. The purpose of this phase is to complete audit process or procedure and issue audit an opinion or audit report. So in this phase, what do we do? Evaluate governance evidence, perform procedure to identify subsequent events, review financial statements and other report material, perform wrap-up procedures, prepare matters of attention for partners, report to the board of directors, and prepare audit report. So that's basically stage number 10 that we discussed earlier, right? So you see that this was basically two different topics with different titles, but having different structure, but same information, right? Same information. So that's all about our today's lecture, and I hope, inshallah, that you have not misunderstood these two topics or mixed these two topics. These two topics are basically from information wise they are same, but from structure and topic title wise they are different, right? So thank you so much for being with me. God bless all of you.